And now, Daniele Bernardi, CEO of Diaman, for his presentation and his closing remarks.
Bravo, Adam. Lo slide. Thank you. So, thank you, any one of you that you stay here for all the presentation. I hope that you enjoy the conference. And wow, I'm speaking after Adam Beck. It's an honor for me, honestly. And maybe not all of you know who Adam Beck is. He was the inventor of proof of work of Bitcoin. So he's a legend in our field. So today I will speak about perpetual future and how to setting up a long-short strategy in crypto assets. So I started for two questions. First of all, who knows what a perpetual future is? Okay, so very few. Okay, I hope that this lesson can be useful for you. So the second question is, do you know this guy? No, the academic professor cannot replay. It's too easy for them. Yes? Keynes, very good. The ones that say the market can remain irrational more longer than you can remain solvent. Okay? And probably he experienced that because he was one of the first that profoundly discussed in the academic field about the future, the use of the future, how the backwardation works, and so on. So the future started in around 1930, and until 1960, more or less, there were a development. And then, in 1972, the CME started with the first broadly acceptable future on currency. So they started with currency, and then after 3 years, they started with the interest rate, and after 10 years, with the equity future. So since 1972, we have a huge development of the traditional future that has an expiration day and has a kind of mechanism that I have to repurchase another future after 3 months, and this cost of carry is a cost for the buyer usually. But how are the traditional future works? Basically, if I make an example. I am a oil refinery company. I have to purchase some crude oil, and I'm scared that in 3 months this can be higher. The price can be higher. I can purchase a future, so I transfer my risk that I'm an economic operator to a financial operator that take the risk for me. Of course, he's trying to speculate that the future goes down instead of up and can make a profit. But at least I'm, as an economic operator, I can have the certainty that the price of the crude oil that I will purchase is defined today. But the future has contango and backwardation. That means that if the price of the future is higher than the spot price, the name is contango, means that if I buy the crude oil future at, for example, the spot price is 50 and I buy it at 60, of course, I pay a cost of carry because during the time the price will be aligned, and at the end of the future, at the maturity, the price will be the same. And then when I buy again, I rolling to another future, I have to pay this cost of carry. That depends from many factors. In case of crude oil, also the cost of storage and the interest rate and so on. The backwardation is the contrary. When the price is lower, in that case, is who is shorting the future that are paying the cost of carry. Okay, this is how is working a traditional future. But I have another question. Ruggero, I'm sorry, you cannot reply. Who is this guy? Schiller, okay, very good. I was sure that. But why I ask you about Schiller? Because he was the first one in 1992 that proposed a solution to make not a recurrent future, but a perpetual future. But of course, at that time, it was quite impossible to apply because many reasons. The first one, that is the cost of transaction. If I have to pay the other counterparty 2 times a day, is a mess, you know. And the decimal of the fiat currency that usually is 2 or 3, no more. So there is a lot of complication to do in the real world. But in the digital asset world, that Bitcoin has 8 number after the commas, Ethereum 17 number after the commas. So it's very simple to implement. I can pay with a smart contract every 8 hours, like it usually is the time of update of the perpetual future, and I pay the counterparties without a lot of friction. So in 2016, BitMEX started to propose this kind of perpetual future that has not expiration day and work quite better. Nowadays, most of the trade, basically 3 or 4 times that the spot market in crypto are doing every day using perpetual future. So it's more liquid than the Bitcoin itself. And how the perpetual future work? Basically, is working. The price stay slightly the same of the spot price, but if there is a positive funding, basically the longs holders who purchase the future pay the funding rate to the shorts. If the price is slightly negative, there is a negative funding, so it's the short that pay the longs. Okay, and the funding rate depends from some factor, like the premium, the liquidity, the interest rate, and so on. You have to know that in 2017 and also 2021, the interest rate of Bitcoin was around 30% a year. So if I have Bitcoin in my wallet and I short perpetual future, I can easily gain 30% in 1 year without risk. Nowadays, not more possible because the funding rate is decreasing. To have this kind of funding rate, I have to go to a liquid token or less liquid token, but it's interesting, this kind of system. So, as I mentioned, only Binance trade more than 50 billion a day. 50 billion a day in perpetual is a lot of money. If you think how much are the transaction costs, you can understand how much money Binance is earning in this field. But compounding is more than 100 billion a day traded in perpetual futures. So it's a huge market nowadays. The centralized exchange and also the decentralized exchange, checks and X, has usually a lot of perpetual pairs, sometimes more than the spot pairs. Unfortunately, there is a lot of leverage. I say unfortunately because the value of diamond is ethics, and it's not ethics to have 125% or like Aster 1000% leverage, because that means that the people that are using this kind of leverage lose the money in probably seconds or minutes because it's just a bit of fluctuation of the price, and you are liquidated. But as I told you, the future was started to transfer the risk from economic operator to financial operator. No? Warren Buffett one day said that the financial market is a space where the money goes from the not patient investor to the patient investor, okay? And the perpetual future is a place where the money goes from the inexperienced guys to the experienced guy. It's sad to say, but it's the truth. There is a lot of people, a lot of people that are losing money because they are using leverage without a deep understanding how is working the leverage and the risk that they are incurring on. So just to make an example, from the 10th of October, when the crypto winter started this last year, there were more than, till today, more than 80 billion of liquidation. So it means that a lot of people lost money for a total of 80 billion that move to something else, so to other people, okay? That maybe are more understandable, they understand better the market. So here I put some tips. I don't go through because we wasted too much time. I'm the last one before the aperitif, the final aperitif. But you will receive the presentation and you can go through some tips for avoid to lose money with the perpetual future. But anyway, now we start to create together a long-short strategy, okay? Do you want to do with me a long-short strategy? Okay. So first of all, we need to cluster all the universe because there is 1,000 and 1,000 of tokens, and most of them are shitcoin. Sorry, but it's the truth. And so we need to classify. Here we have make a classification for sector, the principal sector. And so there is a token related to AI, token related to DeFi, Bitcoin, ecosystem, and blah, 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 okay? And this is the first step. The second step is to clean all the token that is not liquid, that is not serious, that there is a lot of feature. Then we have the cluster, the group of sector of the token. Okay, what we can do with this group of sector? We can start to compare them. So in that example, there is the sector proof of work and the sector AI, okay? Both long, okay? If I invest €1, $1, this is in dollar, at the start of 2023, now in one case I have probably 50 cents, in the other case I have 1.6 euro, okay? So what I can understand at this chart, that thanks to Perpetual, nowadays it's very, very simple to say, oh, okay, I go long to proof of work and I short artificial intelligence sector, right? Okay, this is very simple to do. And in that case, I going long to proof of work sector and short the red one to AI sector. And the blue line is what I achieve from this strategy. okay? And the first achievement is that I reduce a lot of the volatility, I reduce the drawdown, and so we say, okay, this is made in 100% in 3 years is enough. Could be enough. For me, could be very enough. So we make, of course, a matrix of all the combination of the sector. Of course, this is an academic work, just to let you understand the potential of this. But here we put all the sector against the other, long against short or short against long, okay? And I can see that there is a strategy that made more than 100% in 3 years. Simply long in a sector and short in the other. If I compare the drawdown, the example that I showed you before was minus 24%, so not really good. If we say that here there is a strategy that has a drawdown only of 7-8%, okay? But anyway, it's just, as I said, an academic work. And then if I say the Sharpe ratio, I can see that there is a lot of strategy long-short that achieve more than 1 or more than 1.5 of a Sharpe ratio. That is not so bad, 1.5 Sharpe ratio. Very, very simply, just to go long and short to one sector. So let me show other 2 examples. Long proof of work and short layer 2 is quite good. Long real world asset and short gaming and metaverse. You can say, hey, gaming and metaverse, you are shutting to the Red Cross. But anyway, this is quite constant, you know. It's not so bad to have this kind of strategy. There is a problem. I'm doing a work ex post. Ex post, I know that is working. No, ex post is simple, but it's not the concept to have just one strategy that is working in 5 minutes. But it's like I want that you know that it's possible to completely change the distribution of the return and the risk thanks to the perpetual if you are able to use it in the right way. And then there is, the last example is, in the office we say Bitcoin against shitcoin. No, sorry, I hope that there is not altcoiner here, but that has a token, created token. But in that case, it's quite good the same. But it's just an example to let you understand how we can extract value, real value, as Bertelli told this morning in the first topic, extract value from an active strategy, you know, not just following passively what's happening in the market. Okay. And then this is a backtest that we made. It's a backtest with a walking forward. In the sample, the calculation, and then for 1 week out of the sample, then we recalibrate and blah, 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 no? With all the transaction fee. But this is not the concept, because this is a backtest. And the backtest usually work very well in the paper, and when we apply is difficult. And the reality is that it's truly difficult for one reason that we discuss in a minute. This is the real track record that we are doing with a fund that we have done. I don't want to make promotion, but we are achieving what we are doing with the track record. But the real difference was made by the execution, because the real problem in crypto asset is the execution. Why is a problem? Because this is the order book of not a very liquid token, no? But just to make an example, I take just the first that I have in the screen, I don't select it. So this token, the bid and ask, has 23 basis points. It's a huge, because I work hardly to negotiate with the exchange to have 1.4 basis point when I'm making a limit order, and then I have to pay 23 basis point just for the spread. No? And the second problem is that if I just invest $10,000 in this token, maybe I want to buy, I basically move the price of 26 basis points. So I'm paying with just $10,000, that is nothing, I'm paying 50 basis points. I cannot make any kind of strategy if I pay 50 basis points per trade, you know? It's impossible. Even if the model theoretically is the best in the world, I cannot make a profitable strategy. So I need an algorithmic trading that can try to avoid to pay such a lot of basis points. So what we have done, we have created an algorithmic trading that has the name time-weighted average price, okay? Was created by Vladimir, principally, that speak in the panel before. And basically, we can decide the time, how much time I need to make the complete trading of, I don't know, 100,000 euro of this token that we saw before. I don't know, 20 minutes, okay? Then I have to decide the frequency, how much small trade I have to do. I can say 20, okay? So 1 per minute. And then I have to decide the amount per single trade. In this case, is 5% of the total amount, just to make an example, okay? So if we see this is a real trade that we have done, the goal, if I'm buying the Polkadot in this example, the goal is to purchase more than possible at the bid price, okay? So how I can do this? I just put the limit order at the 1 basis point higher of the bid price. So I enter in the book and wait 1 minute to see if the market with a fluctuation hit my order. Most of the time, you see that was able to hit the price. So what does it mean? That we make 72% of trade as market order, only 27% are taker. Taker costs more in the fees. And the efficiency was 3.3 basis point. So basically, we don't pay fees for this trade. And we don't purchase at the ask plus the liquidity of the book. We just purchase at the bid price, almost around the bid price. So the efficiency was quite good. The contrary can be if I have to sell. I have to make more order than possible at the ask price, you see? No? And in this case, because the spread is large, even I make 50% maker, 50% taker, I had for almost 5 basis points of frequency. Sometimes here I make all the total as a maker, but the same I have a slightly cost for the transaction. So to make a story short, here there is the statistics, and to make a story short, the average basis point that we paid actually in these 2 months is 0.24 basis points. So it's likely 0, that is quite good. And the market maker order is more than 65%, so it's quite good. Why am I telling you this? Because execution is probably the most important thing for having a successful long-short strategy. So it's not just a question to have a good idea to go long or short, but it's a question of execution. So just to conclude, the perpetual future is the frontier, the new frontier for the derivative market. There is a lot of inefficiencies in the crypto market we saw before, but for create a profitable strategy, we need to have a strong algorithmic trading execution in automatic. So if you are curious, during the aperitif, you can ask us what you want. So thank you very much. Thank you. So now there is the aperitif, and I would like to thank you, all of you, to stay here till the end. And I hope that you enjoyed the conference. I want to thank all the speakers for these insightful days. And we will see on 25th of February 2027 for the 21st edition. And who knows us know that 21 is an amazing number. Maybe better than 20th edition. Thank you very much to anyone.